Hi, I'm Stephen Carson coming at you from St. Louis, Missouri in these United States. Show looks a little bit different this week. I've been having connectivity problems, so I'm back to StreamYard for now until I can get my ISP to hopefully figure out what's going on. And hopefully I won't be fiddling too much with the setup being completely different than I've been used to for a long time. Let's see. I guess one thing I'll mention is that the US event that I spoke at last year, got to meet some great folks, is happening again this year. In fact, I should have had this ready to go. Let me just drop a link in the chat. Here we go. Skildings. There, that's the one I want, right? Well, maybe it's easier just to do a short link. Okay, yeah, here's the link to that. And we've got, let's see, I'm going to get it wrong if I do it off the top of my head. We have academic agents speaking, most likely remotely, Aaron McIntyre, Dave the Distributist, Charlemagne, more speakers to be announced soon. In fact, by the way, they will take submissions or proposals for talks. I don't know if they're accepting those now, but there is a chance to jump in and get to speak. One of the benefits of which is that you get your fee for going is covered, and it's not cheap. So that's a big motivation. Yeah, would love to see folks there. It was really good. Some people are a little shocked at the price tag. It's actually not unusual for a conference, but it has a great benefit of, say, filtering for the serious folks. And that was certainly the case last year. And that doesn't mean that it was so serious and boring or something like that. I don't mean that at all. I mean that the quality was high, and therefore the general feeling of the gathering was really great. It was very positive. I brought my wife, a little bit of a gamble, bringing her to this first, who knew what this was going to be like, right? I brought my wife. She was so impressed with everyone there. She really liked everyone there. They liked her. Would love to see you, meet you at the event in June in the Nashville, Tennessee area. Okay, so that's that shilling. And I think I'll stop there and bring on Mr. Blackhorse. Hello, sir.
Nice to see you. How are things in St. Louis?
Oh, doing very well. We're happy to be past the part where the ground freezes. That
okay.
part of yeah. We're into the warmer part of the year. So
we had an ice storm in Canada over the last 2 days, so
So you're not quite there yet.
Yeah, I'm not as up a creek as my friends in Quebec, but we were without power for a while. So.
Ooh, wow.
Well, in Montreal, they're like 36 hours and counting with no power, not expecting to be restored in some parts this week.
Is Canada considered a first world country? Just curious.
We used to be.
Been there, done that. Yeah. Okay. Let's see. Okay. Anything you want to shill personally before shilling our friend?
No. My links are the same as ever. Hopefully, we'll have a new article on the Red Ensign in the next couple of weeks. But other than that.
Okay, cool. Well, let's go to something else we wanted to promote before we get into the main topics for the day. And that is a fellow who has a channel and uses the name online of Jimmy Thomist. I don't know how much he goes into detail, but it's quite obvious from the videos he makes that he has some sort of military background. I don't know how specific he is about it, Blackhorse.
Yeah, I mean, Jimmy Thomist, regardless, putting aside his actual experience, he's a genuine expert in operational military activities. And so he's done a series of really high quality educational videos breaking down the operational aspects of the Ukraine conflict. So we wanted to highlight them. They're really worth your time. He expects to be releasing a couple more over the next couple of weeks, kind of review it year in review of the conflict.
Just put that link in there. Yeah, it's really interesting. You could take it either way. Of the parts that I've watched so far, tell me if this makes sense to you, Blackhorse. You could take it as teaching you about modern warfare, what warfare is now as opposed to hundreds of years ago, or even during World War II, because that's what is in a lot of our heads. If we know anything about it at all, it's from old histories or old movies of long ago. He updates you, and I have to say, it's really different. After the first like one or two, I was like, oh, war has changed a lot. What it actually is like on the ground is really, really different than all the things we were watching, even the World War II stuff. It's quite different than that. So you could see it as just educating you on what warfare is like, using Russia in Ukraine as sort of an example, or you could see it as teaching you about what's going on in the Ukraine and giving you some sort of context to help you understand it. You could kind of come at it either way, right?
Yeah, and one of my favorite parts of the latest video that he put out is this extended discussion on the quality of information that comes out of warfare, and how it gets from how the lovely maps you see if you like subscribe to a private intelligence agency's map service, how they come to be, and the extent to which they're likely to be accurate. And so it's a really useful kind of epistemic dialogue about what information that comes out of Ukraine you should believe versus what information that comes out of Ukraine you should not believe. And the answer is you should be very skeptical about almost all of the information that you see presented.
Wow. Yeah, which of course leaves a lot of room for what you see, which is one side will say Russia's about to leave with its tail between its legs. the other side will say Ukraine is surrendering tomorrow. And it's like, how can both of these people be making these claims based on, you'd think like we have a common set of information.
Well, I mean, speaking as a historian, it wasn't until the Soviet archives were opened in the 90s that we were able to accurately plot the movements of Red Army and German units during World War II on the Eastern Front. So like 70 years later, or sorry, 90s, it would have been 50 years later at the time. So it's, it's not surprising that the information that you saw in the first days of the war did not accurately reflect the tactical situation. Shouldn't be surprising if information you're seeing now doesn't accurately reflect it either.
Right. A lot of room for imagination to fill in the blanks, right?
Yeah.
Motivated reasoning. Okay. Anyway, yeah, I totally agree. Jimmy Thomas series is really sharp. It's the kind of stuff that, we used to associate with YouTube at one time. Well, I guess there was two things we had associated with YouTube at one time. One was just completely bizarre, random stuff. And then the other was well-researched, really information-packed content. And that's the kind of stuff this is. Like, strap in and get ready to really learn when you watch Jimmy Thomas. Okay, so we're going to start, as we often do on Econ Minis, with a update to an old story, old story, to a theme that we're following. And that is the Russia sanctions. We had discussed them extremely early. I continue to have a little bit of hopefully appropriate pride, Blackhorse, that our show on the sanctions and how Russia was going to deal with how Russia had positioned itself for the sanctions and what we thought the effects of the sanctions would be. I continue to have a little bit of pride that was like a month after the war started or something. It was really, really early. Yeah. It was like a year ago.
Yeah. In the first month of the war. And we've not issued a wrong prediction out of any of that work.
Right. Speaking of which, one of the sanctions was to say, hey, when Russian oil gets purchased, that's funding the Russian war machine or whatever. And so I guess they just tried to get everybody to stop buying Russian oil, and that didn't quite work. Then they said, okay, well, but you can't buy it for more than a certain price. Try to, cut it close to cost or something for them. I don't know. And now that's falling apart, right?
Yeah. So OPEC Plus cut production earlier in the month, which has driven oil prices up a little bit, which has caused Japan to decide that the oil price cap that the G7 nations agreed to, it's not for them. So we have Japan, a pretty significant historic ally of the United States and the other powers fighting in Ukraine, decides that this aspect of the sanctions on Russia is uninteresting to them. So
Yeah, and okay, now this might be where my age shows itself, Blackhorse, but I sometimes look at these things and I kind of cast back into my mind as to who was on what side in the Cold War,
yeah,
you know? And if it's like somebody who is Soviet aligned and they're kind of playing ball with Russia, I'm like, shrug, Syria and Russia have had a relationship for a very long time. In fact, that one might go back before the Soviet Union because of the orthodoxy,
yeah,
the shared Orthodox Christianity. But Russia and Iran, Soviet Union and Iran, right? You see a lot of these sort of some of the old alliances sort of stayed in place even when the Soviet Union fell apart, or the old dividing lines. So to me, what really stands out is when somebody who was really aligned with the U.S. in the Cold War and remained aligned with the U.S. even after the Cold War ended, starts to make some moves that, shall we say, are not what the United States empire would like, right?
yeah. I mean, typically in foreign policy, you think of Japan as like almost a colony. It
Right.
it doesn't have much of an independent foreign policy at all, but apparently today it does. So interesting.
Yeah. So surprise, surprise. Okay, I think that's all we wanted to get out of this story, right?
Yeah.
Oh, and what is this? It one exception to rules binding G7 nations. Did it have to like ask or something?
Yeah. There was a whole diplomatic procedure that it
Ah.
went through in order to do this.
It had
So,
to get the U.S. to agree to the exception.
which in itself is kind of,
Huh?
yeah. So, what basis the U.S. would agree to an exception to their sanctions rules on Russia? Like, there's a. I didn't want to necessarily get into it because the information we have is kind of doesn't quite all make sense to me. But there was some diplomatic engagement by which Japan got the U.S. to agree to this. I
Wow.
assume that engagement looked like Japan is going to do it anyway, so the U.S. better agree so it doesn't look weak. But
Right. Yeah, but yeah, I don't really. Oh, okay. It looks like it's because it's a rule binding the G7 nation, and Japan is one of them.
yeah,
And so it's basically saying, well, we're not leaving the G7, which has this rule, but we need a little asterisk on the rule, um, because otherwise we're going to be in trouble with our energy consumption or whatever, right? Okay. Anyway, enough on that. So let's turn to our main topic, which is the state of the U.S. dollar and of various threats to it. Fun story, thanks to I'm sorry, you don't remember the account that shared it with us, do you?
Watcher Guru.
Okay. Well, that's the story. I meant the
Yeah,
Twitter
it's
account.
also the Twitter account.
Oh, okay. The Watcher Guru has this story that three congressmen, names that will be familiar to some of us, introduce a gold standard bill to stabilize U.S. dollar's value. So Alex Mooney, Andy Biggs, and Paul Gosar have introduced this bill to facilitate the repegging of the volatile dollar to a fixed rate of gold bullion. There's a history we went over. Gold was initially, the big break was in 1935. Hopefully I'm getting it right, under FDR. And then the final break was 1971 under Nixon, where any tie to gold was gone. And of course, it's just been inflation ever since. One thing from this story, let's be clear, we're not sharing this story because we think this is likely to happen. Just because three congressmen introduce something doesn't mean anything. It can just be, well, it doesn't. I want to be careful here. When congressmen do that, it doesn't necessarily mean they're just virtue signaling or whatever. You got to start somewhere. Go ahead.
Well, it means they want it in the conversation.
Yeah, that's right. It's a way to get it on the table. It makes it more official. It's not just some idea somewhere is talking about. It's been formally introduced as a proposal to be debated, right? it probably doesn't go anywhere. Like it just isn't carried forward in terms of coming to a
Well,
floor debate or anything like that.
if they're
This time,
if they're really good, they can get it to a vote and get it voted down, and then accuse everybody who voted against it.
Right, but I think if they're serious with this, and like I said, not just sort of virtue signaling or whatever, the intention is they introduce it this year, it doesn't go anywhere. They try again next year. They try again the year after that. Each time they get more co-sponsors, right? Maybe because people are seeing more and more problems with the US dollar. That would be the serious path. I don't really believe it. But anyway.
Well, that's the Wilberforce thing, right? He introduced the anti-slave trade bill like 50 times or something before it got passed.
Exactly, right. They do note something that's worth keeping in the back of our minds as we go on through the rest of these stories, which is that the dollar has lost more than 40% of its purchasing power since 2000. Then if you go back to 1913, it's lost 97% of its purchasing power, 1913 being key because that's the introduction of the Federal Reserve Act, right? So that's the introduction of central banking into the United States. Okay, so with that as a little tiny protest here against the behavior of the dollar, let's look at some actions about the US dollar that might in fact carry a little more weight, maybe. So first of all, China has settled their first LNG trade in yuan. Okay, so just to be clear, now, Blackhorse, we're going beyond theory and, hey, this might be something someday. This happened. This is a record of something that happened in the financial markets, right?
Yeah, this actually happened. So typically, the overwhelming majority of trade in LNG is done in US dollars on exchanges like the CME. Here we have a new exchange that now settles in Chinese yuan, and they have a very important participant in the state-owned CNOOC, which is the state-owned Chinese oil and gas company, I guess. So because they've got the state-owned entity as a kind of captive client, you're going to see some volume on the exchange. You're going to see actual significant trades in liquefied natural gas settled in yuan.
Right. Now, this time it was 65,000 tons of LNG. That means nothing to me, but Blackhorse informs me that it is a regular shipment of LNG, right? Not small, not big, but normal. Yeah. And is there any significance that it was imported from the United Arab Emirates?
I mean, it is significant in that the transaction was international in nature. So it wasn't two parties within China selling in yuan. It's two parties crossing international borders.
Right. And as I understand it, I mean, obviously, if you are in Britain using British pounds, buying at a British shop, there's nothing earth-shattering about that. That's completely normal. When we talk about the U.S. as a global reserve currency, we're talking about international trade, right? Or most preeminently, other things too, but it's international trade being conducted in U.S. dollars.
Right.
That is what gives U.S. dollars its status as the global reserve currency.
Well, it's worth reviewing why FX markets move. So most currencies, well, there are kind of two types of currencies that are active in the world today. One type of currency is the true float currency. The other type of currency is pegged to another currency. True float currencies, their value is dictated by supply and demand, and there's really two sources of international demand that drive their value in the foreign exchange market. The first is demand to invest in businesses, those kinds of hard assets within a country. So you'll see this. If there's a real estate boom in a country, you'll also see its currency go up because international investors will come and have to buy local currency in order to invest in real estate. Very often, this happens for resource rich countries where people are forced to buy the local currency in order to invest in natural resource projects. The other source of demand is this international trade piece, where people are forced to buy a currency in order to participate in international trade, buying the commodity or good and service that they want to buy. So we talked about this extensively in the context of the petrodollar in the episodes we looked at there, but it's true across a very broad basket of commodities that in order to purchase them on the international markets, typically you have to buy first US dollars and then your commodity.
Right. So this is just one LNG trade, but it is, I think the reason why this is a story and the reason why we're highlighting it is that a static view says, one LNG trade, no big deal. The dynamic view says, yeah, but what if it's the first trade of many, many, many more, right?
Yeah, well, we know because of CNOOC's affiliation with the CCP that they're going to settle their trade, their buys and sells of natural gas here. So you're going to have some captive volume on the exchange. It remains to be seen how much international commodities flow you're going to get over this exchange, but there's going to be some, whereas there was none before. So
right, and when I say first of many, one way to think about that is first of many LNG trades. Another way to think about it is LNG is the first of many commodities that start having some trade in international trade in yuan, right?
Yep.
Okay, next. Staying on the China theme, there's going to be a lot of China in this, actually. China and Brazil strike a deal. I've just got to read this in proper announcer fashion, okay? The deal, Beijing's latest salvo against the almighty greenback, will enable China, the top rival to U.S. economic hegemony, and Brazil, the biggest economy in Latin America, to conduct their massive trade and financial transactions directly, coming to a stadium this weekend. Anyway, I thought that prose was really funny. Anyway, so maybe there's massive trade between China and Brazil. I don't know. I'm guessing that in the grand scheme of the world,
it's not a top 30, but it's not a top 30 bilateral relationship. But there's, it's not nothing.
Yeah. Brazil's not small as a country or even financially necessarily. It's just not one of the big economic powerhouses in the world, right? Yeah. Nevertheless, China, as usual, it seems like I see this comment made a lot. The U.S. tends to be big and brash, and China tends to be slow and patient, right? And what we see is China making lots of little deals, right? With the idea that lots of little deals start to add up, but also the little deal today becomes bigger as economies grow. This is the growth, what do they call it? GGO is what we call it at my company, but global growth opportunities, I think, something like that. Yeah. The idea being the people who can get in there early with some of these markets that are emerging as more serious economies in the world. You get in there early and it doesn't look like a big deal today, but 10 years from now, 15, 20, 30, now you've got if you're part of that trade, you've got a piece of a pie that is really growing because they have a lot of, one way to look at a developing economy is it's small. Another way to look at it is it's got a lot of headroom, right?
Yes.
It could, there's no way to go but up on some of these places. Well, that's not true, but there's a lot of upside potentially to these markets.
Yeah. And there's been China has had significant economic influence in Brazil for a while. This is another step forward. But as a standalone story, we probably wouldn't cover it. it's part of a pattern of stories here
Right.
that we want to cover. So,
Right. And I actually didn't highlight really anything else from this except to note that they are going to start, to trade in their own currencies, ditching the United States dollar as intermediary. Okay, so that means that they would, exchange the error. I skipped the part after the part I read, Blackhorse, that actually has an error, if I understand. Yuan for reals, not reais. Anyway, reals, I believe, or the real is the name of the currency in Brazil.
Yeah.
I believe. So in other words, they're going to use yuan and reals, which, in theory, or would to some degree expand the demand for Chinese currency, and Brazilian currency reduce the demand for U.S. currency, right?
That's correct.
Yeah,
And it's worth taking a second at this juncture. The Chinese yuan is not a float currency. So the Chinese yuan has a very carefully managed exchange rate with the United States dollar.
Right.
So what you're seeing here is redirected demand for US dollars instead of reduced demand. So
good point.
If Brazilian trade results in significantly increased demand for Chinese yuan, in order to maintain the peg between yuan and US dollars, you're going to see increased demand for US dollars to be storehoused in China. What this is doing is it's moving from a situation where there were a lot of countries like Brazil, countries like Malaysia, etc., that all had individually were purchasing U.S. dollars in order to maintain in order to maintain trade relationships, to a situation where you have one larger and larger accumulator of U.S. dollars in the peg in the Chinese government, and one very well defended accumulator of U.S. dollars.
Right, and what we're looking towards is, does that put China in a position to break the peg at some point, right?
That's right. So that puts them in the position where not only could they just break the peg, but they could simply alter the peg in order to devalue the U.S. dollar.
Oh, yeah, right. Yeah, you mentioned that before. It doesn't have to be black and white. They would just potentially get into a position where, instead of, I guess, the terms being more dictated to them, it starts being more of a two-way conversation about the relationship between the yuan and the US dollar, right?
Yeah, well, and they've been in that position for quite a while, where Washington and Beijing have negotiated the exchange rate for the U.S. dollar as a matter of politics and industrial policy. This was a huge thing in the sort of pre-Donald Trump relationship between China and the U.S. And so each one of these moves puts them in a stronger and stronger position in that negotiating relationship.
Okay, so moving into our next story, I just want to point out, speaking of, economies with a lot of upside, if you think about these countries from an economic point of view, except for China, which is clearly becoming quite the player, they're not necessarily that significant on the world stage economically, right? But they just happen to be, we're about to mention two more countries. We've talked about China and Brazil here. Now we go to India and Malaysia. Think about those four countries from a population point of view. This is a lot of people. In fact, I think, I haven't done the numbers, but China, Brazil, India, Malaysia, if you add those together,
it's like half the world's population.
That's what I was going to say. You're getting pretty close, if not at or over half the world's population. So, if they escape grinding poverty, like we've been seeing in China in my lifetime, right? That's been happening over the course of my life. If they more and more escape grinding poverty, just the sheer number of people times, some reasonable amount of productivity per person starts to make these serious players on the world stage.
Yeah, right.
Because they all have more people. They all have more people than the U.S.
Yeah, if the average Malaysian starts living like the average Albanian, suddenly their economy will appear larger than the United States.
Right. Yeah. Okay. So once again, they move. Oh, I like how this was stated here. What is this? Oh, it's the Hindu.com. India and Malaysia move beyond the dollar to settle the trade in INR. I like that. Very, very politic, We're not rejecting it. We're moving beyond it. We had a relationship at one time, and it was good for that time in our life. But now we're going to move beyond. We've grown up. We've changed. It's not you. It's not you. I've changed. Anyway, right. So trade in INR, which
Indian rupees.
Rupees. Thank you. Losing my currency names. So India and Malaysia settling trade in Indian rupees, again removing the dollar as a intermediary currency, right?
Yeah.
Wow. Okay. Probably not much more to say about this. Well, okay. Let me just foreshadowing of more of what we're going to see. Note this section in the article. Trading in the US dollar has faced growing difficulties, especially after the Russian economy was sanctioned. Okay, wait. The sanctioning the Russian economy was supposed to hurt Russia. Why is it that trade in the US dollar is facing difficulties?
Yeah.
So as a fallout of the sanctions and war, making payments to Russia in US dollars became increasingly difficult, which in turn triggered a search for solutions in national currencies and de-dollarization worldwide. So we're trying, I don't want to jump on that de-dollarization worldwide because that's kind of what you and I are trying to keep an eye on, right? We're sort of drawing our own conclusions on this. But this article at least is saying they see a pattern, right?
Yeah. So again, you have, we don't tend to be exposed to it, but there's an entire kind of media ecosystem in like the in subcontinental Asia, and they have their own editorial perspective, and they're kind of coming from the third worldist perspective, where they would love to see the U.S. as less important than it was. So it comes out in their editorial perspective, certainly.
Right. But having said that, as our show here is demonstrating, a search for solutions in national currencies and de-dollarization worldwide, we're seeing it too, to be fair, right, Blackhorse?
Yeah, we're monitoring a pattern here. The issue is, how large is this pattern, right?
Yeah.
And so, like, if you look at charts of USD usage in international trade, you see in the sort of post-01 world, the US dollar actually gaining more prominence rather than losing it. So it's really only in the sort of post-2020 world where this pattern becomes worth examining, or this potential pattern becomes worth examining.
Right. And I remember sharing some of these things on Twitter. A few people said, there's always talk about the US dollar, they're going back before 2020. There's always been this talk about, the US dollar is going to lose its position as global reserve currency. And it's just talk, that's one of the responses I got. And to be fair, you're saying, before 2020, that's a reasonable way to respond. Since then, and especially since
especially since the war on Russia.
Yeah, the war on Russia, it's not, doesn't seem quite as reasonable to simply dismiss all of this pattern of activity we're seeing, right?
Well, I mean, it would have been worth looking at this shortly after the Iraq War. It turned out not to be. Things are always worth looking at, right? Again, when fundamental geopolitical events change, we're going to be we're in a different world geopolitically now than we were prior to the invasion of Ukraine. And it's worth examining. It's worth watching the story. I don't think it's the editorial position of this podcast that the U.S. dollar will be dead by 2024. But
no, definitely not.
It's worth watching, right?
Yeah. Well, one of the things I learned from one of my economics professors is he says people tend to look at the average, and for many purposes, that's fine. Sort of median behavior, you could say. But he says that's not how economists work. Economists look at the margin. That is, we look at the guy who's wavering, in this case, between, using doing trade in U.S. dollars or doing trade in some other currency. We're interested in the people who are wavering. What are they doing?
Yeah.
Are they trending towards more use of the U.S. dollar for international trade and for reserves and so forth in banks, or are they doing less of it? Because that marginal behavior over time, if it continues, if the pattern continues, starts to become the average behavior, right? But it starts on the margin. It starts with the guy who's more willing to take a risk and do something a little unusual.
Yeah, so it'll be interesting to watch this, but certainly we see the formation of some pattern, and in our next story we see a very, very important marker likely to come down the pike here in the next. Well, I think we'll know the truth of the matter in the next year. So why don't we move to this?
Yes, Saudi Arabia considers accepting yuan. There's that yuan thing again, instead of dollars for Chinese oil sales. Okay, now I was, again, sort of like these other articles, I was going to be like, oh, well, how big of a deal is that? Let me just jump right to something to put this in perspective. Okay, yeah, here we go. So the U.S. is now among the top oil producers in the world. It once imported 2 million barrels of Saudi crude a day in the early 1990s. That is, the U.S. was not producing oil, it was importing oil. Okay, fair enough. But now, with the U.S. Producing more of its own oil, those numbers have fallen to less than 500,000 barrels a day in December 2021. Okay, all to the good from a, I don't know, Pat Buchanan perspective, where industry, domestic industry, all that stuff. But there is a consequence of that, right? Which is that the U.S. is not as big of a trading partner for Saudi oil as it once was. Okay, now with 500,000 barrels in your mind, 500,000 barrels a day in your mind, listen to this. By contrast, China's oil imports have swelled over the last 3 decades in line with its expanding economy. Saudi Arabia was China's top crude supplier in 2021, same year as those 500,000 barrels a day for the U.S., selling 1.76 million barrels a day. Okay, so that's Saudi Arabia to China, 1.6 million, followed by Russia to China, 1.6 million barrels a day. So you add that up, that's over 3 million barrels a day that China is consuming from Saudi Arabia and Russia. Meanwhile, the U.S. is consuming 500,000 barrels a day from Saudi Arabia. So, it's not always true, but sometimes the customer is king, right?
Yeah. Yeah.
So that might be part of what we're seeing here.
Well, certainly this reduces the demand for, if the Russian transactions are already being executed in yuan, if the Saudi Arabian transactions are executed in yuan, that's a lot of demand for yuan, and a very large proportion of the demand for U.S. dollars internationally will become an indirect consequence of demand for yuan, which it creates a very interesting situation. What we call the stream, the quote unquote Yuan-Dollar kill switch. The question, if that relationship gets large enough, you get into a position where the U.S. dollar status as the reserve currency can be damaged by a single counterparty that is not easily threatened militarily,
right?
Which is a very different strategic situation than has existed, basically since 1946.
Yeah. So potentially a big. Okay, now here, just want to distinguish carefully. Here we are not at the this has actually happened part of things, like with the LNG trade. This is Saudi Arabia considers, right? And as you go through the article, I'm not going to go through it, but it's tedious. But they talk about, well, the Saudi finance minister thinks it's a bad idea, but this other guy thinks it's a good idea, and they're like, I don't know, it's like criminology for the Saudi princes or something,
Yeah.
And I don't know anything about that. I'm not going to comment on it. But it's interesting that the Saudis are seriously considering this. Note one of the reasons, by the way, and this is a little bit different than the war in Russia and so forth. The Saudis have grown increasingly unhappy with decades-old U.S. security commitments to defend the kingdom. And they're angry over the U.S.'s lack of support for their intervention in the Yemen civil war and over the Biden administration's attempt to strike a deal with Iran over its nuclear program. Iran and Saudi Arabia are, well, one is Sunni, one is Shiite. I don't know which. Anyway, they're on opposite sides of that conflict. Saudi officials have said they were shocked by the precipitous U.S. withdrawal from Afghanistan last year. I found it quite interesting, Blackhorse, that got dropped in. What does their withdrawal from Afghanistan have to do with anything? I think it has something to do with credibility, military credibility.
Well, right? The premise of the U.S. Arrangement with Saudi Arabia is that the U.S. will defend Saudi Arabia from, all enemies, foreign and domestic. Let's put it that way.
Well, exactly. The regime, keep the current people in power. Yes. To be blunt. Yeah.
And if the U.S. is not able to maintain their puppet states, like the former government of Afghanistan, that bodes badly if you're a U.S. puppet state.
Yeah. Yeah, right. That's the direct relevance. When is the U.S. going to suddenly decide to up sticks and leave, right?
Yeah.
So we talked about barrels, but listen to this. China buys more than 25% of the oil that Saudi Arabia exports. So that's a very important customer, to put it lightly.
Yeah.
Right, to understate it. Let's say, majority of global oil sales, around 80%, are done in dollars, and the Saudis have traded oil exclusively in dollars since 1974 in a deal with the Nixon administration that included security guarantees for the kingdom. We covered this in depth with Dissident Nomad on a show about the Empire of Dollars, I believe it's called. What else more of this deterioration of the relationship. The Saudi relationship with the U.S. has deteriorated under President Biden, who said in the 2020 campaign that the kingdom should be a pariah for the killing of Saudi journalist Jamal Khashoggi in 2018. That was, maybe a great virtue signal, maybe one I can support from a certain point of view, but maybe not the best in terms of diplomacy with an extremely important ally.
Not only an extremely important ally, what happens to people in power in countries that the U.S. calls pariahs? That's one step short of a death threat.
Yeah, that's a good point. That's right. Yeah, when does Saudi Arabia get added to an axis of evil or something like that, right?
Yeah.
And so what's the result of all this? The U.S. relationship with the Saudis has changed. Meanwhile, China is the world's biggest crude oil importer, and they are offering many lucrative incentives to the kingdom. So, we've got President Biden screwing things up, and China is quietly, carefully, patiently cultivating a relationship with Saudi Arabia with everything it's got, right?
Well, they have a lot of leverage, so we'll see.
Okay, now, Saudi move could chip away at the supremacy of the U.S. dollar in the international financial system. That's what we've been discussing, which Washington has relied on for decades to print treasury bills it uses to finance its budget deficit. The oil market, and by extension, the entire global commodities market, is the insurance policy of the status of the dollar as reserve currency. If that block is taken out of the wall will begin to collapse. Let's see. This is another, we've talked before about China and its Keynesianism everywhere. Building things all over, construction projects everywhere after they built ghost cities in China itself. Saudi officials in favor of the shift away from the US dollar and towards yuan, have argued the kingdom could use part of yuan revenues to pay Chinese contractors involved in mega projects domestically. Yeah, so just like in Africa, China's in Saudi Arabia building bridges or whatever, towers or something.
Well, you remember we talked about that.
Go ahead.
You remember we talked about that giant line that they want to build to replace Riyadh with one building?
Yeah, the wall or something, or
Yeah,
what was it called? The line?
it's called the
Yeah,
line.
something. The line. Okay, yeah, craziness.
So
Yeah, so right. So let me see here. What would happen? Oh, I see. So China would buy oil from Saudi Arabia, pay it in yuan. Then Saudi Arabia would turn around and pay off the Chinese contractors building the line or whatever. And there you go. We give you oil, you give us crazy construction projects. Which is the Saudis are into that. Hey,
yeah,
I'm
I
I'm
mean,
not throwing stones, Okay, so buried right at the end is something that really caught my attention. Let's see. Ali Shahabi said the kingdom can't ignore China's desire to pay for oil imports in its own currency, particularly after the US and EU blocked the Russian central bank from selling foreign currencies in its reserve stockpile. Any doubts countries had about the need to diversify into yuan and other currencies and geographies would have ended with that huge step. Okay, I'm feeling like he stated it very evenly here in his prose, in his words, but when I read that, I was like, oh, this is a big statement here. So unpack that for us, please.
yeah. So if you go back to our stream about the Russia sanctions, we discussed the fact that banking is a business about confidence, and the action of using the sanctions to take all of the money in Western jurisdictions that belonged to Russian oligarchs, and to take the sovereign and to seize the assets, the deposits in various currencies that the Russian government had at the Federal Reserve, has created, apparently, so we speculated at the time would create. Now we have, Saudi diplomats saying did create damage to confidence in the U.S. government, and particularly in the Fed as a banker. And so you have, with reduced confidence in the Fed as a banker, that means that one of the consequences of that is a loss of control of the assets.
Oh, I'm sorry, you lost me on that last part. Reduced confidence.
Reduced confidence means you take your assets and put them somewhere else. What he's saying with the need to diversify yuan, you should read that as not just the need to diversify into yuan in terms of holdings, but also the need to put your yuan not in the Federal Reserve, but in the equivalent in I think it's the People's Bank of China or something.
Right.
Anyways, in a jurisdiction that didn't capriciously sanction a set of oligarchs that are, not all that different from you.
Yeah, right. Yeah, I mean, they probably had partied together, to be frank. But anyway, right. So it seems a weird thing for me, having grown up in the last, let's see, I graduated from college when the Soviet Union fell, right? So my formative years were while the Soviet Union was still around. And to be fair, China had already started on the road that it's on now in 1978 when I was about 9, but it was pretty early days back then. And the idea that people would feel safer storing their wealth in China than in the United States sounds pretty crazy to the younger me.
Yeah.
If you follow me, Blackhorse.
Well, especially because the Chinese communist government got its start by stealing all the deposits of Westerners in China.
Oh, I didn't know that.
So this was the whole dispute. They eventually had to pay it back as part of the deal to get Hong Kong back from the British. But one of the first acts of the Chinese communist government was to repudiate all their Western debts that go back to what they call the century of humiliation. Eventually, the British bondholders got their money back, paid back in gold equivalent when Hong Kong was returned. But certainly, they don't have the best history, on the 100-year time horizon either.
Right. So it's just crazy that people would it seems crazy to me that people would be like, maybe China's the safer bet, really.
Well, Dave in the chat here raises another important issue.
Mm.
One of the issues with the yuan is that Chinese citizens don't have the right to take it out of the country. So there's a complicated situation inside China between currency that is not allowed to leave the country and currency that is allowed to leave the country. There's a spread between the two. So we could have a whole stream on the mess that is the question of how to take assets out of China and the weird foreign exchange market that it's created. Mm-hmm. But certainly, if you were to go back to 1990 and you had in 1990 the Chinese government that we have today, there would be no one interested in putting money in yuan in the Chinese central bank by comparison to, the 1990 era Fed. Mm-hmm. This is a statement of not how great the yuan is, but how bad the behavior of the U.S. government has been in the last 10 years.
How much trust has been lost. Yeah. Okay, well, let's turn to a final story. I'm going to drop this link for you. I think it's a good way to wrap this up and sort of summarize. My friend Ryan McMacken at the Mises Institute writes about this whole thing, why the regime needs the dollar to be the global reserve currency. One of the things that he points out right at the beginning is that some of the reporting about the threats to the dollar as reserve currency are a little hyped up for a particular reason. What he says is much of the analysis was framed to stoke the public's fears of Chinese geopolitical power. And it is really hard, Blackhorse, I think, for us in regards to China, because I definitely see what a strong theme that is among, like Tucker Carlson, for example, but just in general, to be anti-China, to be suspicious of China is kind of like cool in boomercon circles, at least. You know what I mean?
Yeah.
And whatever. I mean, maybe there's reason for that or not. I don't know. But I think the trick is to not let that cloud your view of reality, right? To look at things fairly clear-eyed without having that sort of fear campaign against China clouding things.
Yeah, I mean, there's you have to be even-handed with this sort of thing, because our sort of the boomer cons say good and bad things about all kinds of people, right?
Yeah, right. So he acknowledges that, but then immediately says events are piling up that point to at least a gradual decline in the dollar's preeminence in the global economy. And that could lead to serious economic trouble for Washington, not necessarily for Americans. That's something I haven't quite puzzled out yet. But for the government, the United States government itself is kind of got itself into what, in my view, seems like a fragile position in a way. They're kind of dependent on the way things are, and it would be quite difficult for them to back out of the system.
Yeah, so he'll review this a bit in the article, but effectively the U.S. government supplements the fact that it's got a deficiency of tax revenue by taxing the rest of the world that uses USD through inflation.
Exactly.
And this is how, to quote our friend academic agent, USG lives in Keynes' world and everybody else has to live in Hayek Mises' world, in terms of the way that they spend money.
Exactly. Yeah, that was a really good point he made, actually.
Your question about what this will mean for regular U.S. people is very unclear. I mean, we talked about some of the examples of what happens when governments go bankrupt on another stream, but there's definitely good and bad to it.
Right. Yeah, complicated. Okay, so he says events are not moving as quickly as the pundits are predicting. So that is, even still, I would say both of us would be in agreement on this. Don't get into this thing of like, the U.S. is going down in 2023. Not impossible, but I wouldn't put any money on it. I wouldn't put any gold on it. Let's put it that way.
Gold.
He says, so events are not moving as quickly as the pundits are predicting. In other words, there's some overblown rhetoric around this, but they are moving. See, that's why I think this is so hard. There's some motivations and incentives, along with just the usual clickbait incentives, right? To get a little too excitable about this stuff, but you don't want to fall off the horse on the other side and say nothing's happening. Because the big dramatic thing isn't happening, then nothing at all is happening. I don't think that's right either. Something is happening, as we've been trying to demonstrate on the show today, right? It's small. It's indicators of where things might go, something to keep an eye on, right? So he says, if current trends continue, the United States will find itself facing a new and enduring era of stubborn price inflation and weakening U.S. geopolitical power. Okay, so let's see what I want to highlight here. He kind of talked about some of the same things we've talked about. Maybe the yuan would become the global reserve currency. He says, not anytime soon. China still uses capital controls. Its economy is not as open as the U.S. economy. U.S. government debt still looks less risky than Chinese debt. But there are some things going on. So there's the Russia-China summit to carry out trade transactions between Russia and the countries of Asia, Africa, and Latin America. And so he says this would be quite a change from the status quo in which non-dollar transactions make up a tiny portion of international trade settlements. And the trend is continuing elsewhere. China and Brazil, we talked about that. The LNG story, we talked about that. Oil giant Saudi Arabia, talking about going to yuan, talked about that. So it wouldn't send the dollar into a tailspin or a collapse. The dollar's role in the world economy is still huge. We're going to see an indicator of that in a moment. And it remains the most used currency by far. So it's number one by a long shot, okay? And he says something to look at here to keep your perspective, keep your feet on the ground about this stuff, as interesting as these developments are, is to look at how a U.S. dollar dominates foreign exchange reserves. These are assets in foreign currencies held on reserve by central banks. These reserves are partly an indication of just how much central banks anticipate dollars will be needed to engage in international trade. Okay, so the central banks say, hey, we need to keep some euros because we have trade going on with the EU. We need to keep US dollars because of all the trade that goes on in US dollars. We'll keep a little bit of some other things, right? So what does it look like? Hopefully you can, it's a little hard to see, so I'll explain. The big blue part of this circle is 58% of the currency composition of official reserves is in US dollars, okay? Wait, I'm sorry. Let me be careful here.
Yeah, no, 58% in
no,
US
no,
dollars.
that's not a percent. That's not a percent. Sorry. The part of the circle, which he doesn't tell you what it is because it says in millions of dollars. Okay, I don't know what that number is.
It says
maybe it is 58%. Okay.
It's by percent. I don't know.
Okay, it is. Okay. Why is it in millions of dollars? Okay, ignore that.
Because the source is the IMF data, which is in millions of dollars.
Yeah, okay. So it is a percent. So 58% of foreign exchange reserves held by central banks around the world is in US dollars. So completely dominant. The euro's at 20%, not trivial, but still the US dollar is way out ahead.
Well,
right?
It's also worth noting that the US dollar's role in this regard has been, so if you charted this from sort of 2012 to 2020, you would see the US dollar's role here expanding rather than contracting.
Okay, right. But he says, let's see, as of the fourth quarter of last year, the dollar made up the lowest percentage of foreign reserves since 1995, falling from 66% of reserves in 2014.
Yeah.
So it's 66% down to 58% in about 10 years.
Yeah.
Right. Yeah. So it is, he's seeing a shrinkage. Okay. So what about yuan that we're talking about as a potential player here? Well, it's at 2.69% of reserve, So, it's not that yuan won't be really, really important over time, but it's not going to be this year. It's not going to be next year, right? there would have to be a lot of trade shifting over. The Saudi deal would have to go through, and a lot of other deals would have to go through, and a lot of economies that aren't that big right now would have to grow in the way China's has.
Well, and looking at
and
this
become big
chart,
players. Right?
looking at this chart, the most interesting question is what will happen to that 20% of reserves in euros as the Eurozone's economy continues to become less and less important. So we'll have to see.
Oh, I see. So it could be that even with the euro becoming, the European economy itself becoming less important, the euro starts to become used as a reserve currency, say. Or it could just be as the European economy shrinks and there's less trade with it, the percentage of euros people hold just shrinks. Right?
Yeah, it's hard to say.
Yeah.
I mean, we've had a very substantial economic change in Europe in the last 18 months. So we don't want to speculate too much, right?
Oh, good explainer on this circle graphic here. Eric Rees says it probably means you convert the amounts of reserves to millions of dollars rather than, say, tons of gold before calculating the percent.
Yeah.
Okay, got it. Because you got to translate everything to one common unit before you can calculate a percentage. What do? They translate it to millions of dollars. Then they calculate a percentage based on everything being denominated or converted to millions of dollars. Okay. Let's see. I'm not going to go over this too much. Why does reserve currency status still matter? We've done a show or two, at least, on this. It does matter. But because it matters, weakening reserve status means a weakening U.S. regime. And he says, discussion about the dollar's reserve status creates a false dichotomy between total domination of the global monetary system on one hand and complete abandonment of the dollar on the other. A more likely scenario is that the dollar will weaken considerably, but will remain among the most often used currencies. After all, even the pound sterling lost its status as reserve currency in the 1930s. It did not disappear. So that is exactly what I'm thinking. I think sometimes the rhetoric I'll see Blackhorse around by people who aren't thinking through this too carefully or just looking for a clickbait headline is, the dollar's going to disappear, it's going to crash, it's going to fall off a cliff, all that kind of overheated rhetoric.
Turns out that there's a lot of outcomes between dead and total global domination.
Right, exactly. And in particular, one of the things that was brought home, I was seeing a presentation talking about where the biggest companies are in the world. Like 60% of them are US based.
Yeah.
60% of all the big companies in the world, the whole globe, are in the US. So you don't underestimate what a big deal the US economy remains to this day. Well, yes, China's come a long way since 1978. Don't want to take anything away from them, but the U.S. economy is still a big, big beast in the world, right?
Not only that, Americans tend to look at their economy and say, wow, it's much less free than it was in the past, and that might be true, but they don't tend to look at their economy and say, how free is the U.S. economy compared to if I wanted to start a business in China or if I wanted to start a business in Belgium or something. So, there are complicated issues here.
Yeah. Oh, shoot. I'm not going to find his name. DeSoto. There's a fellow who, I'm going to pull it right up, right? It is Hernando DeSoto. Yeah. Hernando DeSoto. Not the historic figure, but a more modern figure. He did a little study, if I remember correctly, or he talked about it at least, where he said they did a little experiment where I probably mentioned this before. They started a business in the United States somewhere and just did a timer. How long did it take us to go through the legal process to be like officially registered as a business and that could open its doors, right? Or at least had the status of a business. He wasn't talking about building out a storefront, but just had the legal status of we now have a name that we can operate a business under. And, it was, 6 hours, 5 minutes or something. I don't know, for them to go into an office and register and all that. And then they did the same thing in like Colombia or Brazil. and it was like 352 days, 13
Yeah,
hours,
exactly.
and right. And I heard the same stories, Blackhorse. I have a really good friend from Kerala, which is in the south of India.
Yeah.
And it's probably one of the better places to do business in India, possibly. But anyway, he described how one of his cousins or some friend or something was trying to start a manufacturing business, and they couldn't get the government permission to get the electricity for the factory. And they had like built the building and they were getting all ready to go, just waiting for that electricity to get turned on. And it took like a really long time, like I'm talking like year or two longer. And eventually they just had to give up and they shut the business down.
Yeah, I mean, this
Like
kind of stuff goes on.
you can't imagine that in the US, that you would like start a business and just not get the permits, the bureaucracy to grant you the permission to use the electricity to run your darn business, right?
Yeah,
but that happens in other places in the world.
Yeah. Well, and it's one of the reasons why the breakdown of the U.S. legal system is such a big deal and so worth watching, because whatever you might think of U.S. courts, compared to courts everywhere else, they've been extremely reliable over the last 100 years. And there's certainly some fraying at the edges of that pattern.
Right. Yeah, right. So we tend to focus in our circles on some of the like criminal justice issues, right? But it sounds like you're talking about, I'm not saying those things are unrelated.
Yeah.
But you're talking about the U.S. courts in business matters potentially becoming more political and less just reliable.
Well, the Chevron deference decision that goes back quite a long way moved a lot of power out of the courts into the executive agencies and made it very, very difficult to sue the executive agencies for an unjust decision. So the consequence of that has been that since the 80s, the EPA has become virtually all powerful in American business. So
right.
I mean, the EPA might be a less corrupt agency than some agencies that exist, but it's certainly a very powerful tool to be reckoned with. And because of Chevron deference, you basically can't sue the EPA for rendering a decision you deem to be unfair. You can only sue the EPA if you can demonstrate that they didn't follow their own process, basically.
I'm looking for this next section. It's yeah, here we go. I found it. Okay. Yeah. Okay. So what would it mean for the U.S. regime to have a weakening reserve status? As we were saying, don't think of a dichotomy. Think of it as just sort of sliding into being less of a reserve currency than it is today. So he says, let's imagine the US dollar sinks to 40% of all foreign reserves from the, 58% that it's at right now, right? Yeah. 40% would be a big move, right? It'd be a very big move. So 40% of all foreign reserves, and it's only used in 1/3 of all international trade invoices instead of 1/2, as is now the case. So it wouldn't be gone, but it'd be noticeably diminished from where it is today. He says this would not necessarily destroy the dollar or the U.S. economy, but it would weaken the U.S. regime's geopolitical position. As global infrastructure around other currencies grows, it will become easier for regimes and private firms to circumvent U.S. sanctions. Okay, so now I got to bring in the Marco Rubio quote that Caitlin Johnston highlighted. He says, "We won't have to talk about sanctions in 5 years because there'll be so many countries transacting in currencies other than the dollar that we won't have the ability to sanction."
Yes.
This was kind of a gaffe because he was basically saying we've got to keep the dollar strong, not so that the American people, can be prosperous or something, which is what most people would think the point you'd want to make, but so we can like punish people around the world, right?
Yeah.
Which is, kind of a creepy statement, right?
There's another side. It demonstrates the other side the value of the US dollar as the reserve currency. So we talked about its economic value to supporting the US government, but it also has this value as a tool of foreign policy.
Right.
And so, it's very obvious that the US dollar's role as the global reserve currency is essential to the regime. How much it matters to regular Americans is
hard to say.
Much more debatable.
Right. He also, in terms of geopolitical consequences, he says higher interest rates for the U.S. government. A world less awash in dollars will mean a world with less demand for U.S. assets such as U.S. government debt. That means higher interest rates for the U.S. government and less of an ability to finance elective wars by inflating the currency. Well, that sounds like just about a straight up win for the U.S. people, right? Because that means, bring the boys back home and all that kind of stuff.
Yeah, but in fairness, there have been lots of governments who fought wars they couldn't afford.
Well, that's true.
We'll see.
But all else being equal, that would be one more drag on the ability of the U.S. to fight, right?
Yeah.
Okay, a weakening of the dollar's global demand will limit the U.S. regime's ability to throw its weight around internationally. And then he quoted Rubio. He already did. Should have highlighted this up like I usually do. Okay, and then he says, if you wanted to stop the slide, it actually would be easy to do. Austrians know about sound money, right? You end the U.S. central bank's easy money policies, reduce monetary inflation, and rein in deficit spending. This would immediately buttress both the real and perceived value of the dollar and make the dollar far more attractive as a currency that holds its value. It could ensure continued widespread use of the dollar if it stops using the dollar to bully other regimes and wage economic war without the dollar's weaponization, which, that's the whole issue with them seizing Russian assets and stuff, right? And the effect that had on people who were watching this happen. Without the dollar's weaponization, there's very little motivation to abandon the dollar in favor of other currencies. So he's saying, essentially, it's funny, right? He's essentially saying, if the U.S. regime didn't act like the U.S. regime, the dollar could be doing really well. What are the odds of that, right?
Well, the only caveat I put to this is if you deconstructed the deficit spending regime, it's possible the U.S. regime would just lose control, and that would be.
Yeah.
I have no idea what that would do to the dollar, but.
Right. How much is it in power because of the way it spends money and so forth, right?
Yeah.
And if it tightened its belt, would that mean that people would rise up, or somebody?
Yeah.
Maybe not.
Well,
people,
would it collapse
elites?
Would it collapse the patronage network, especially the global patronage network, right? So
patronage, yeah.
The question is, like, if the U.S. government stops spending, however many hundreds of billions of dollars a year it spends in like third world countries, well, obviously that would be good for the U.S. dollar in one respect. On the other hand, the U.S. would lose all these client states, and what would that do to the U.S. dollar? Well, that's harder to say.
Right. I think empire usually is.
Usually it's a net cost.
It's a net cost,
than a net benefit. But anyways, it's certainly hard to predict.
We have one super chat that goes way back. I think, did I miss it? I might have missed it 2 weeks ago when we last had our econ minis. I do not remember reading this out, or he could have just sent it after the show. I don't know. But Sam153 on Subscribestar says, glad to see the econ gang back. What do you predict the fallout of this banking crisis will be to regular citizens? Okay, so we got to rewind in our mind a little bit back to Silicon Valley Bank.
Yeah.
And the other banks are, Swiss, since then, Credit Suisse, right?
Since then, Swiss, and then
Deutsche Bank is teetering. Right.
Yeah, there's also that private bank in New York.
Right. I'm forgetting the name.
Yeah.
Signature. Yeah. So, good question. Any thoughts on that, Blackhorse? What is the fallout for the regular citizen?
Well, it really depends on whether the Federal Reserve is able to maintain this schizophrenic policy where it has one set of interest rates for government bonds purchased for bank deposits and another set of interest rates for everybody else.
Mm-hmm.
If it's able to maintain that policy, then the consequences of the banking crisis will be very little to regular people. I mean, there will be, a certain number of my crowd who will be very happy to pick up a bunch of clients formerly of Silicon Valley Bank.
Right.
Credit Suisse is maybe more significant in that regard because Credit Suisse will now probably be forced to divest itself of its international tentacles. So we'll see what happens as a consequence of that. But, if you're a regular person, not very much. On the other hand, if the Federal Reserve is not able to maintain its schizophrenic policy and has to unify interest rates because of arbitrage trading or whatever other reasons, what you're going to see is a limit to the Federal Reserve's ability to raise interest rates to control inflation. And if you see a limit to the Federal Reserve's ability to raise interest rates as an inflationary control mechanism, that will have profound impacts to regular people. It means mortgage rates will be lower. It means goods and services inflation will probably be higher. It means asset inflation will probably be higher. And so what you'll see is a lot more of the kind of environment that we experienced in 2021 as the fallout.
Say again, like 2021.
So if you think about 2021 for regular people, you saw price inflation and asset inflation that vastly outpaced either returns on like regular investments, like bond investments in a pension or something, and vastly outpaced salary growth. So you saw effective decline in standard of living as a consequence of inflation. And in most places, quite substantial decline in standard of living as a consequence of inflation in 2021. If you're into a circumstance where, because of limits to the ability of the Fed to raise interest rates, you're going to have inflation running ahead of interest rates for a long period of time, which is, I would say, even a likely outcome of this event. What you're going to see is a continuation of that environment, potentially for years, where returns on the kinds of investments you see in pensions are substantially less than inflation. And so you'll see like interest rates right now, interest rates are running at 4%, inflation's running at 6% officially. But if you went back to 2021, you had inflation running at 10% and interest rates at 2%. That 8% annual spread represents a decline in the purchasing power of low risk investments, which means that people who have a lot of assets and pensions are getting their wealth drawn away from them. Right.
Not so good.
So, well, I mean, not so good if you're a pensioner. On the other hand, it might not be the best thing for the United States generally that it has this weird social structure where people expect to retire at 63 and do nothing for the next 30 years. I'm not sure that's really going to be a thing for very long from a historical view.
Yeah, and I remember, and this was before lockdowns. This was several years ago or longer. I remember seeing elderly people working as like baggers at the grocery store and stuff, and I was like, "What is this?" Like, you didn't see old people working most of my life. They all, I guess, went on Social Security and retired, and
Yeah, I mean, people of my grandparents' generation, kind of the World War II generation, for the most part, retired in their 60s and then didn't work again.
Exactly. That's what I was used to. Yeah.
And you're seeing this vision of life plan kind of recede into the mists of time. And I've just looking at this historically, it looks even weirder when you consider that many sort of millennial and younger men just don't enter the workforce until like their late 20s or something. So the
Yeah.
percentage of their life that they actually work is very small by historical standards.
Right. Yeah. Yeah. Retire at 60. Don't start working till mid-20s. The actual part where you get work done in your life is shrinking from both. Was shrinking from both ends. It's not. I don't think we're, based on that talk at the Mises Institute I shared, I don't think we're doing good on the starting working. But it seems like now the older people are coming back to work.
Yeah, certainly if this economic pattern goes on, well, some things are going to have to change.
Yeah, I remember the first time I ran into somebody, and he was, explaining to me what he's doing now, and said, "Yeah, so I retired 5 years ago, and now I'm doing this business." And I'm like, "Wait a second, I thought retirement meant you stop working."
Yeah.
Well, no, retirement. What do they even mean when they say that? They mean that they like cash something out or something, right?
It means that they're receiving a pension from something.
Okay, yeah. So they triggered a pension and then just kept working.
Yeah.
Yeah. Oh yeah. In fact, Dave Bertrand says people these days don't retire, just get some pension and keep on working. Yeah. So it's a supplement to their income, or it's part of their income as opposed to they're living off of it.
Yeah, well, I have like a relative who worked for a municipality in Ontario, and he retired at like 60, quote unquote, and now he works as an independent contractor. So they pay him a pension and they pay him a salary at the same time,
Right.
which is, it's a thing, I guess. What do I know?
I don't have any pension. That's for
No,
sure.
I own my business, so my pension is what I save.
That's right. Yeah, and my pension is 8 children.
There you go.
Okay, so that's my plan. The old style plan. Return. Okay. Let me just do one more check, but otherwise I think we're ready to wrap up. And we did all our showings at the beginning. Tennessee event. What do they call it? The Nashville gathering or something. Oh shoot, I already forgot. They gave it a nice name. The Nashville Convention.
There we go.
That's right. The Nashville Convention, Forging a Common Foundation, from June 23rd to June 25th in Tennessee. So really recommend that to you. I'll drop that in one more time. The reason I'm pushing it, guys, is, I want to see it be a success, but also I want my audience to be there, and I'm kind of guessing that it's going to sell out. So I would rather have you guys buy some of those tickets before there's no tickets to be bought, so I can see folks there. And then we mentioned Jimmy Thomist and his great work on analyzing the war, and I'll drop that link one more time as well. Okay, I think that's everything. Thanks once again, Mr. Blackhorse.
Thanks. Good to talk to you as always.
And because I'm not on OBS, we don't get any fancy credits or anything. It's just goodbye.